The Nigerian Senate finally passed the 6 trillion naira appropriation bill on Wednesday. The Monetary Policy Committee also raised the interest rate to 12%. That's what we intend to dissect in the next 30 minutes on Business Zone. I am Ugochi Olibo. Welcome to the program. The Nigerian National Assembly, after months of postponements this Wednesday, finally passed the 6 trillion naira, that's about $30 million appropriation bill. The total budget has not changed, but the deficit has risen to 3 trillion naira, that's about $15 billion, from 2.2 trillion, about $11 billion. The budget was fixed with a benchmark of $38 per barrel of crude oil and an exchange rate of 197 to a dollar. Well, the Monetary Policy Committee of the Central Bank of Nigeria has raised the benchmark interest rate from 11 to 12%. The committee took this unexpected decision at its second meeting in the year in Abuja. The bank also raised the cash reserve ratio (CRR) from commercial banks to 22.5% from 20%, and it held the liquidity ratio at 30%. Governor of the bank, Godwin Emefiele, told reporters that the central bank would keep the foreign exchange rate stable despite a sharp fall of the naira on the parallel market due to shortages of foreign currency. Analysts had expected the central bank to hold interest rates steady at 11%.
The MPC voted to 1. Raise MPR by 100 basis points from 11% to 12%. 2. Raise the CRR by 250 basis points from 20% to 22.5%. 3. Retain liquidity ratio at 30%. And 4. Narrow the asymmetric corridor from plus 200 and minus 700 basis points to plus 200 and minus 500 basis points.
A two-day National Economic Council retreat ends in Abuja with agreements reached on the need for a concerted and consistent effort by state and federal government to diversify revenue sources. Federal and state governments also agreed to focus on fiscal responsibility as a critical element in macroeconomic balance. The Council has set national targets for self-sufficiency in production and identified crops which would be actively monitored to guarantee success. They also presented an incentive scheme for states taking actions towards improvement of the investment climate in the states, including grants that would be distributed by September.
Is encouraged to identify at least 2 agricultural crops in which they have comparative advantage, and will work together to open up rural and feeder roads to facilitate transportation of agricultural produce, to increase investment in infrastructure, and to explore public-private partnership to resolve this.
In anticipation of the approval of the budget, we have actually lined up around 350 billion, which will be pumping into the Nigerian economy in the forthcoming months. We explained our rationale and the processes that we've put in place, safeguards to ensure that this money actually achieves the desired objective, which is to stimulate the economy.
Infrastructure and services will result to develop infrastructure delivery plan, considering current financial capabilities, driven principally by the goal of improvement of the quality of life for the populace. State government support for artisan training, scoping, and support for existing artisan culture, use of existing training facilities.
Well, joining me in the studio to examine the economic implication of the increment on the monetary policy ratio is Ayo Oyalowo. Thanks so much for joining us in the studio.
Thank you for having me.
No, so how satisfactory do you think the budget is, and do you think it would be embraced by Nigerians and many stakeholders?
You mean the budget?
Yes.
Yes, the budget has been passed, and I expect that there should be some changes in what Nigerians have said. If you ask the ordinary man on the street, say, oh, the country dry, oh. So yeah, I expect the country to become wet. But typically, the Minister of Finance has said they want to reflect the economy, that's stimulate the economy by pumping in some money. And thankfully, she was anticipating that the budget would be passed, and fortunately it has been passed the next day after she made that statement. So about 350 billion will be pushed into the economy immediately, and I think that will stimulate some economic activity. Already, so many contractors have left site.
Of course.
So many people have been laid off because the construction companies don't have money to work, they cannot hire people, they can't spend. Now, I expect that such companies will be able to hire the people they've laid off before. They will create immediate jobs in terms of primary employment. There will be secondary and tertiary employment too. The women that will come there to cook, the people that will come and do the labor, the manual labor. So yes, that is a first step in terms of reflating the economy and stimulating economic activities.
Okay, now for many, the rise in the benchmark interest rates by 1% came as a surprise. Were you surprised?
Well, people should not be surprised. I mean, the inflation figure for February came at 11.38 or round it up to 11.4. So automatically you have to raise the MPR rate because you have to. It always have to be higher than the inflation rate. And the inflation that we are currently experiencing is what I'll call false inflation. It's something that happened because of some parameters that were raised. The increment in the price of electricity, the seasonal food price that have gone up. I mean, we have seasonal food in our market. So those are what I call false inflation. I think it will still stabilize over time. I think it will not be all this high because really the benchmark we have is we shouldn't go beyond 6 to 9. Now we've gone to 11.4, and I think over the course of the month, maybe 2-3 months down the line, I expect it to go back to a single digit. So the MPR rate, the MPR rate had to be raised so as to be able to cover the problem that will have been very, very glaring if you still have a lower rate.
Okay, we'll talk more on your expectations and all on these increments, but we'll take a break now. When we come back, we have more on the program. Stay with us. You're watching Business Zone on TVC News, and I have with me a policy analyst, Ayo Oyalowo. We're still looking at the increased, the implication of the increment on the monetary policy ratio. And the Nigerian Apex Bank seems to have been influenced by the soaring inflation and not by stimulating economic growth. How would this eventually play out?
Well, by raising the MPR rate, you'll be able to tighten liquidity. And then it will be like a plus for those people who have interest in treasury bills and bonds. So it will stimulate that area. My only fear is I'm hoping that it will not take out the people in the real sector, because that's going to be the little challenge we're going to have. But I think with the passage of the budget and with the focus of the government on diversification of the economy, the real sector should be having their own hooray in a short while. So right now you are going to tighten liquidity ratio, you're going to tighten liquidity in the system rather, you're going to make sure that the inflation does not spiral beyond a manageable limit. So that is why they have to raise that the MPR. So I'm not really too surprised. So it's actually supposed to be. You should never have a higher inflation rate than MPR rate.
So you believe in all this?
Well, it is the option. I mean, that's the only option left. That's the only option left for the CBN, really. Okay. They really don't have another option.
Okay, now with the economy experiencing a bit of slow growth and banks not willing to extend credit lines to investors, what might the CBN be overlooking in this latest decision, and what are the immediate implications of all
Yeah, I
this?
just said the immediate implication is I'm afraid for the real sector. But the truth is we've not really had a real sector over a long time. What we've had has been more of businessmen going to China, to the Far East to import. So the government needs to find a way of stimulating the economy whereby we will have growth, real growth in terms of production capacity, which we really don't have. But I think, in my estimation, this budget that has been passed should be able to help if it is implemented as it's supposed to be. Because right now, for the first time, we're going to be having 1.5 trillion in capital expenditure. That is about 30% of the budget in capital expenditure.
First time.
So yeah, since our democracy have started in 16 years, this is the first time we'll be having so much, so much money pledged or earmarked for capital expenditure. So if that is done, if we begin to have infrastructure development in Nigeria, then you can begin to look at the growth in the real sector. And if the real sector begins to grow, because I keep telling people, no matter what Dangote or whoever does, no matter what they do, you will never have an economy until we grow the real sector. And those are the small SME, the small businessmen. Those are the real people that build an economy. You see, we have been working on the trickle-down effect, which was one time branded Reaganomics, where you have one big corporation trickling down to, it doesn't work. The best thing is to have small,
Startups,
medium scale enterprises. They are the ones that really will create wealth. And then you can now begin to have a middle class. So I think, I keep saying I think because of course it is still a proposal, it will be passed, I mean it has been passed, it will be signed into law soon. I am saying think because I want to look at it and see if it will be implemented.
But you
as
believe
it is.
in it?
Yeah, if it is implemented as it should be, then in the next 2-3 years we'll be having a booming economy. Because if you have a capital expenditure that is well spent in the proper areas, and you have a growth in your infrastructure, then you begin to talk about production. When you start to produce, you depend less on forex. You see, our problem where we're having this, you see, everything is interwoven. We're having a lot of challenges in our foreign exchange. We have the dollar naira problem simply because everything that we take, maybe even to the point of water in some places we import. Even the crude oil that we produce, we can't even refine. We have to import PMS for our domestic usage. So for as long as we keep doing this importation, we will always have this crisis. See, forget whatever happened in the past few years. It was just papering over the crack because oil prices was very high. But as soon as the prices started to crash, you saw the reality on ground. So we have to have an economy that produces. We cannot, and I keep saying you can't build a society on consumerism that do not produce. No way. No. It is always going to bounce back on you negatively.
So it's natural sustainability,
it's a natural
plans
expectation. Why people are not saying this is what I don't understand. I mean, when you have an economy that you import even toothpick, you import matches, you import exercise books, how do you expect that economy to grow? You will always be dependent on the whims and caprices of other societies. If anything happened today in China, if China closes down, for instance, Nigeria is in trouble. So we have to get to the point where at least 70-80% of whatever we use at home, we can produce. That is why I'm impressed by the new slogan, grow Naira, grow Nigeria, but I hope it will go beyond sloganeering. We have to.
Well, I think it's going beyond that because we're seeing new startups. People are all over social media showing off.
Aside from those startups, there are other things. I keep telling people, you do not have to invent the wheel. Reinvent the wheel. The wheel has already been invented. All you need to do is adapt it to your own use. And I use one example everywhere I go to. If I check everybody in this office now, maybe everybody have one Samsung phone or the other. Why? We don't need to start a GSM company here. Why don't you invite Samsung? Give them the environment they need to produce and make Nigeria the hub of Samsung production in Africa. See what you're going to do. You're going to do one, you're going to start producing. Secondly, foreign exchange that you will have wasted in importing so many phones into Nigeria will no longer be wasted in that area. Thirdly, you're going to be giving our young people jobs. Fourthly, you're going to be paying tax. Samsung will be paying tax. Fifthly, most of the
Yeah,
African
can we-
countries will
okay,
have to come
let's
and
not
import from
advertise.
Nigeria,
Okay.
buy from Nigeria. When they do that, there will be demand for naira, there will be less demand for dollars, and then you will begin to see that balance. In our-
Talking about that, the issue with foreign exchange, we'll talk about that later. I think we have to go on a break now. We come back, we talk about CBN's foreign policy, foreign exchange restriction. You're watching Business Zone. We'll be right back. Watching Business Zone and TVC News. We still have in the studio policy analyst Ayo Oyalowo to dissect the issues. Now, talking about CBN's strategy to keep the naira and inflation stable by restricting foreign exchange supply, why do you think there is no clear and strong policy on forex?
Well, I can't hold brief for CBN, but they're only doing the best they can under the conditions
That's a
they
quick
found themselves.
question. We have one more
Yes,
before we go.
They can't do beyond what they found themselves. The truth is, we cannot, like I said earlier on, we cannot depend totally on importation, because no economy grows when you become a dumping ground for the produced good of the nation. While it is good to have a trade, balance of trade
Relations
and
and
all
all.
trade relations, there must be a balance of trade. What do we export to these people? We import almost everything. The only thing we export is oil, which is generic, which you don't even have control over the price. For instance, Japan have control over the price of their automobile. They can determine how much they want to sell, but you can't determine how much you want to sell oil.
Petrodollar.
So it's there's no balance of trade there. We have to begin to look at how we will either produce locally or at least bring some of these foreign companies to come and start producing. I mean, if you look back, you and I, when we were a bit younger, you will remember that you have Michelin, you have Goodyear, you have all of them here producing tires. Suddenly nobody is doing that. Now we have to import all our tires. So and in the Benin Edo area, you have one of the best ground for plantation of rubber. That is the raw material you will need to produce tires. Now, we are not doing any of these things. So we are making ourselves so vulnerable.
Before we talk about the infrastructure needed to do all that, let's switch over to the 350 billion naira projected at the NEC to be pushed into the economy. Now, what sector do you think should get a chunk?
It's
of
not what
that?
I think. She's already made up her mind what she wants to do. Basically, it's for the construction companies, roads, and the truth is we need enough roads. You hear the Minister for Budget and Planning already saying they want to make a lot of roads, and we need that because we are complaining that food prices have gone up. Ask yourself, what has been the problem? Even if a farmer can produce, most of the things he produces get destroyed and damaged over time because there is no transportation system to bring it into the towns. So by the time the man struggles from his farm to the town, from his town to the city center, most of whatever he's bringing has been destroyed. So giving the man a loss, and then he has to raise prices at least to meet some, maybe to even just pay the transport fare. So we need to work on that. So I think roads as infrastructure should be one of the major areas. Then the second and the most biggest problem, the biggest problem Nigerians
I thought you were going to say electricity.
It's electricity. That's where I'm going. That's the second problem. I am sure my folks at home cannot watch me now if they don't have a generator, which has been a recurrent decimal. I cannot blame one government for that. I will blame 50 years of planlessness for it. We haven't done anything seriously to make sure that the simplest of all infrastructure. South Africa, with a population of about 50 million, have 49,000 megawatts. We are still talking 5,000 megawatts. The president has just promised us 10,000 before the end of his administration. Good enough. If every government in the past 16 years have been adding 1,000 megawatt per year, in the past 16 years of democracy, we'll be having 16,000
Well, I'm
megawatts.
surprised you didn't blame the past administration.
I said I won't blame the past one alone.
Yeah, okay.
It's a cumulative problem. It's been there, but the challenge I have is the monies that were spent in those areas. What have been the results?
So many questions to
two
ask, but
million
we'll have you back.
students.
We'll have you back to discuss this, not today, but thank you very much for joining us on this broadcast.
Thank you.
Well, good news coming from Gabon. The country is seeking to industrialize its wood industry with the creation of West Africa's largest economic zone just outside the commercial capital, Libreville. The Cox Spatial Economic Zone, launched 5 years ago, spans almost 1,200 hectares. A government report says the area has generated more than $192 million and employs some 7,000 people. That's a huge number. But environmentalists have warned that not enough is being done to protect trees and grow the industry in a sustainable way. Reforms have done little to check illegal logging and export bans on unprocessed timber, which often leads to timber ending up as furniture or flooring in wealthy countries. Prices of crude oil dropped at the various trade centers at the Easter holidays. We'll begin at the London markets. The price of the Brent crude drops to $40 per barrel. Crude oil price had moved beyond $41 a barrel early this week. For the OPEC basket brand, price steadies at $36 per barrel. With that, it's a wrap on Business Zone. Thanks for your time. I am Ugochi Olibo.